What are some of the advantages and disadvantages of a line of credit for your business? Anytime that you are working on your business, you always want to use the right type of financing to meet your need, right? It's like building a house. You can't build a house with just a hammer. Building a business, you're going to need several types of financing depending on what you're trying to accomplish. So let's go into some of the advantages of a line of credit. One, they're quick and easy. So when we help our clients with a line of credit, it usually takes 24 to 72 hours. And as long as they're using that line of credit, it stays open. What that means is they always have access to financing, which is another huge advantage, right? If you have a line of credit open and you have availability, meaning it's not maxed out, if something were to happen, you can access those funds in 24 hours. That is a huge advantage rather than applying, again, to get a loan, to get a working capital line, to get a line of credit. If you already have it, all you have to do is log in and draw, because when we set you up with a line of credit, like anything else, like you're logging into your business bank account, you log in and then all of a sudden you can just draw how much you want, and then the next day the funds are in your business bank account. Next, they're flexible. Part of what we just discussed is having access to it at any time. Well, when you have a line of credit, they're usually 6, 12, 18, or 24 months in length, but every time you draw, it restarts that for that draw. It gives you and the business a lot of flexibility in deciding, what you need the money for and how to grow the business with the funds. Next, you're only going to pay on what you draw on. So let's say we set you up with a $250,000 line of credit and you need $50,000 today for inventory and another $20,000 for marketing. You're going to draw $70,000. You're only going to pay on the $70,000 you draw, meaning the simple interest is only being charged on the $70,000. Also, the payment is going to be structured as if it's only the $70,000 being drawn. It gives you a lot of flexibility, and if you took a loan, if you were qualified for $250,000 on a loan, you either take the $250,000 or less. You don't get a chance to go back and take the rest if you only choose, to take $70,000. Next, the cost of capital. The cost of capital on lines of credit are traditionally way cheaper than other types of financing. Some of our lines of credit start at 5 to 6% simple interest, and they go up from there based on how well you score out. And that is really, really cheap money. Another benefit is you have to use it for what it's intended, meaning, the money's going to get deposited in your account and you could do whatever you want with it. However, if you want to build your business smart, you really should be using a line of credit, for short-term needs, right? So that's marketing, inventory, adding staff, anything that, you're going to have to do every 6 to 12 months. That's how to properly use a line of credit for your business. And next, when you have a line of credit for your business, it's going to help you build business credit. Now, let's go into some of the drawbacks. And there's not much. Again, every single business needs a line of credit. You need a line of credit to help grow and expand your business. You need it to build business credit, and you need it for a safety net. There are some drawbacks. One of the drawbacks is it is shorter term. So what does that mean? Let's say you have the longest line of credit that I've seen in the fintech space, which is 24 months or 2 years. And you want to buy a piece of equipment. Well, you're going to use that piece of equipment a lot longer than the 2 years. The ideal length of time would be 5 years. That's why for a piece of equipment, I would tell you to go and get equipment financing. We would help you get equipment financing and a line of credit. The line of credit to help you with, the shorter term needs, and then the equipment financing to finance that piece of equipment. That just makes a lot more sense. Next, line of credits are usually smaller than loans or advances, meaning most line of credits cap out at $250,000 in the fintech space. And if you were doing $500,000 a month on a working capital line or equipment financing or a loan or an SBA loan, you're going to qualify for way more, and your line of credit would still be kind of capped out. Now, if you get a maxed out line of credit, meaning you're at 250 and you show good payment history over, call it 6 or 12 months, eventually that will get raised. However, most of the time they're going to keep it at 250 to start. Next, another disadvantage, because it's shorter term, the payment to income ratios are a little bit less. All that means is the calculation that underwriters use to analyze how much of a line of credit you can afford, they typically keep the payment smaller, which means you wouldn't qualify for as much. So if you have a business that would qualify for $100,000, let's say in a working capital line, and they apply for a line of credit, they might only get $75,000 or $60,000 for a line of credit. on the working capital line, they'd get 100. That's not that big a deal if you're using it properly. So if you have a line of credit, you use it, you pay it back, you use it, you pay it back. My suggestion is every 6 months, go in and ask for it to be raised. And as the business is growing, what's going to happen is they're going to increase your line of credit because they want to give you access to more capital. Right, so those are some of the advantages and disadvantages of a line of credit. If you have any questions, please reach out to us at integratedbusinessfinancing.com and we'll be happy to help you.